Good evening, this is Duane Lowry for the DPP Grain Desk on Sunday, July 29th. It's about 2:10 in the afternoon. Calls, I think, are probably going to be mixed. And first look at weather finds traders to assess weekend rain activity, which I would say is probably in line with Friday's forecast. There were beneficial rains, but not widespread. Maybe a third of the Midwest got benefit. But what is happening here and what's been taking place over the last several days is we are slowly chipping away at the areas under stress. Not that we are eliminating stress at all, or not that we're in the areas that are receiving the rains, not that they couldn't go back under stress very quickly or still desire more precip. But in terms of trying to stabilize the very dry trend and extreme heat, I think that the weather has gone a long way to do that. And we are shrinking the areas that are under immediate concern, but we're maintaining a large number of acres that will continue to need better moisture, more moisture, and timely moisture to finish the crop out. But at the present time, we're stabilizing more and more acres. The forecast today, I don't think, is much different than we had on Friday. The overall theme probably creates a less threatening temperature outlook for the next 2 weeks, some periods of moisture, some moisture opportunities, and then debates between the models as to whether or not, which area is going to get it or whether they're going to materialize at all. But overall, I don't think today's weather forecast does anything to inflame opinions or to significantly excite people that want to be bullish or are bullish about crops and potential. So from that standpoint, I don't think weather is bullish enough to warrant new action and new emotion and new buying energy. Is it possible we could be called, a little bit higher tonight based on, lack of general rain in the forecast? Yes, I think that's possible. Is it possible we could be called, unchanged or a little bit lower based on some weekend activity and the lack of anything, new and inflammatory in the forecast? Yes, I think that's possible too. Technical conditions are such that we are going to build selling interest above the market, not too far above Friday's closing values. That may make it difficult to sustain a higher opening if indeed we do get a higher opening. I think that what we're dealing with here is a situation where the market is struggling to build new momentum. For 10 days now, markets have been in a trading range. In the case of beans and wheat, we've seen a notable sell-off. We saw some recovery. In the case of corn, we saw a notable sell-off and a recovery. But in terms of creating the real significant liquidation pressures, corn really hasn't done it. If I pull up a corn chart here, you've topped out at basically $8. Last week you traded down to $8.45, but the lowest you've ever settled is at like just above $7.75. So you got most of your settlement prices here for the last 10 days in a 20-cent range. That's not the type of thing that forces a liquidation hand from existing longs. But what it does is we are not able to add to upward energy. And when Informa came out with Friday with 134 yield, that's another 12 bushels below USDA. It's another level of credibility given to low yield comments and rhetoric that we've had for the last couple, 3 weeks. And yet the marketplace actually made the high of the day Friday before the Informa numbers were out. That's true in both corn and beans. The day's highs were established before those figures came out. So you can either come to the assessment that the marketplace doesn't respect Informa, which I think would be wrong, or you can come to the conclusion that the marketplace feels these type of numbers are already factored into current values, which is a possibility. It's difficult to say that the market believes the numbers are lower than what Informa came out with on Friday, yet that's a common thing that's being talked about. There's, now all of a sudden the low number estimate that people are trying to shoot for here is 120 nationally. I think that's extremely difficult to come up with mathematically, but who knows? I think also you got people kicking around that the Iowa yield is going to be sub 150 and some people talking about 140 or less. I think that's a pretty pessimistic view, and it's probably something that I wouldn't want to embrace until you saw some combine yield data to support it. I don't think it's quite that bad. I think it's maybe could easily get 150 or higher But there again, that's in wide debate, and nobody really knows, and nobody's going to know until the combines roll. And also it depends a lot on what kind of weather we have from here forward. We need, prime weather here forward. We need adequate moisture. That doesn't require normal seasonal moisture, but we need adequate moisture. We need relatively mild temps, and if that happens, I think we can maximize what potential still exists out there, and I think the potential exists for something 150 or higher in Iowa. Who knows what the national yield is going to be, but it's not impossible to think that the final national yield could be equal to or above what Informa gave us on Friday. We're just going to have to wait and see. But even at 134, if that's right, or if it's less, as the market has currently been talking about, the market reaction here is stagnating. For 10 days, we're in a trading range. We've thrown 100-degree temps at it. We've thrown we've thrown lack of moisture at it. We've thrown forecasts that suggest there was no end in sight to the 100-degree temps and lack of rain. But yet we've had some rain. We've seen the forecast cool off. But we've thrown an awful lot of bullish things at this thing. Attitudes are near universally bullish. People are completely unwilling to sell it. But yet, don't kid yourself to think that the markets can't break. We saw the corn market break 55 cents off its highs last week. And that was started out on a Sunday night when most people thought we were going to be higher based on weather. We saw beans break more than $1.50 from areas that people thought was not possible to break. This happened while yield ideas continued to ratchet down, while stress was lingering for a third to a half of the belt, depending on how you want to view it, and attitudes were extremely bullish. So, don't kid yourself to think that we can't break. The bottom line question here is, have we seen a liquidation phase, and are we done with the liquidation fears? I don't think we are, but we're going to find out here early this week. Like I said, the calls here tonight are going to be mixed. If we start to weaken from Friday's levels, whether that's on the opening tonight or by tomorrow, whatever it may be, if we begin to falter and we can't gain upside energy here, after 10 days in a distribution type action, the longs are beginning to ratchet up their sell stops. They're trying to protect equity here. And at the end of the day, all we really trade here is money. I don't care how bullish somebody is, if the equity starts to go against them, they're going to want to protect that equity, and that creates selling activity. And so as the people protect that equity and worry about liquidation pressures, if we start to tip over here, how far are we going to go? Long-term support, major support, fundamental support, technical support in D-scorn is going to be somewhere between 675 and 725. That's 50 cents to $1 lower than where it is right now. Could we get there? Absolutely. Are we going to? I don't know, but I think it's a reasonable probability that we have not yet experienced all of our liquidation threats. We're not done with this process of experiencing liquidation. So I think there's concern here on the technical front. I think there's concern on the fundamental front that we were not able to push to higher highs on the backs of an Informa estimate that we had on Friday. And I think the forecast is not threatening enough to build new buying energy here tonight. If we look at the beans, we topped out here at about 1690, give or take, in November beans. We broke all the way back down to 1536, so we had almost a $1.60 break in November bean futures. We've recovered about 90 cents of that break, but we are still, our settlement right now at Friday is about 90 cents off the peak, and it's probably 70 cents off the bottom last week's lows. I think there is still technical reasons to be concerned that we have more liquidation pressures to unfold. I think there are legitimate fundamental arguments taking place and debate and questions taking place about what's happened to U.S. yield potential. We know bean plant has the ability to be under stress, and if it gets moisture and beneficial non-threatening weather in the latter part of July and the key month of August, yield recovery can many times surprise people, and we find that the plant is very resilient. Obviously, we have some acres that are lost because the plant died, ran out of moisture, but that is not the most common situation. And I think we have a situation here where the places that have received moisture, really want to scale back their pessimism toward this crop. And we don't know how the crop will finish out because we don't know what the weather we get from here forward. But the potential right now in the field is probably better than what our worst fears. I think our prices have reflected more of a worst fear mentality over the last couple of weeks, and so if the weather is perceived as stabilizing, possibly setting the stage for some improvement in yield rhetoric, I think that leads to more liquidation pressures. The technical conditions certainly warn of liquidation pressures that can extend below last week's lows. If we begin to falter prices this week, which I think is a real possibility, your key major long-term support in November beans is probably, somewhere around $14.75 to $15. And last week's low was about $15.36. You close at $16.01. So, to say you've got 75 cents or $1 downside risk in beans just from liquidation pressures, that's a very reasonable stance to take, and it's a very reasonable thing to be concerned about. Now, could prices then, once we get done with those liquidation process, assuming there's more to be had here, could we recover? Absolutely. But first things first, and I think we need to be respectful of the market's ability to put in some sort of correction. Wheat doesn't really have any independent news worthy of divorcing itself from corn. Wheat has an overall fundamental storyline and mission per se to remain cheap in relationship to corn, to try to maximize a reduction in corn usage and shifting it over to wheat. So wheat's not going to be able to rally independently either. So I think to start the week out here, there'll be mixed interpretations of weather, but I think the lack of inflammatory spins to weather, the lack of extreme heat, the lack of complete dryness in the forecast, I think means that we don't have enough to inflame and to excite new buying energy. And I think the risk here is that the technical conditions and the stabilizing yield ideas, especially on soybeans here, might be enough to create liquidation pressures. Once the market begins to tip over, I don't think we have to weaken very much from Friday's levels, and we'll begin to see sell stops put in. We'll begin to see traders looking to protect profits, and I think the liquidation process can continue to unravel, can build its downside energy again, and I'd be concerned about close below last week's lows. For the DPP Grain Desk, this has been Duane Lowry.